We do not seek or welcome further cooling in labor market conditions. The time has come for policy to adjust.
Federal Reserve Chairman Jerome Powell announced that the Fed will likely cut interest rates soon after years of keeping them high. He spoke at the Jackson Hole Symposium in Wyoming, an important event for market-moving updates. Powell noted that inflation, which had peaked in June 2022, is now under control. The job market, which had been strong, is cooling down.
Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. My confidence has grown that inflation is on a sustainable path back to 2%.
Though in July, the U.S. added 114,000 jobs below expectations, and the unemployment rate rose to 4.3%, up from 4.1% earlier. Powell acknowledged the slowdown and noted that while 4.3% is relatively low by historical standards, it has risen by a full percentage point from its level early last year. Despite these changes, Powell said the economy is still growing steadily. He highlighted the Fed's challenge in balancing inflation control with economic growth.
The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate.
Economists expect the Fed to cut rates in its September meeting, and Powell's speech supported this expectation. Following his remarks, the stock market rose as investors anticipated the rate cuts.